and this is the focus in Russia. My name is Samuel, and we'll be talking about if Russia's economy can recover in 2016, for example. And a year ago, it seemed that the Russian economy was in free fall. One rating agency, when downgrading Russian credit earlier this January, cited a significant deterioration in economic outlook, the continued impact of Western sanctions, for example, in the plunge in oil prices shocked the banking sector, from the ruble depreciation, market volatility, and drastic hikes in the policy rates as some of the main reasons. The turmoil in Russian markets toward the end of the last year came on top of a period where most of the main macroeconomic indicators were already a source of growing concern. As the International Monetary Fund noted last summer, Russia already entered 2014 with declining potential growth, owing to the stabilization of oil prices. The stalled structural reforms, weak investment, declining total factor productivity, and adverse population dynamics. In addition, the ongoing slowdown was exacerbated by the dual external shocks from sharp decline in oil prices and sanctions. With Chinese demand wavering and U.S. shale producers coming on stream, OPEC became increasingly an irrelevant sideshow. In these circumstances, the seemingly irreversible suffering in oil prices led to severe pressure on the ruble, a surge in inflation, market turbulence, and concerns over financial stability. In response, the authorities accelerated their long-anticipated move to a floating exchange rate in November 2014. Thus protecting both the budget and the foreign exchange reserves. As the ruble dropped, inflation accelerated and hit double digits on an annual basis, starting in December 2014. The accelerating decline. We'll have to say that the accelerating decline. In this regard. And the steady strengthening of the UN, the steady strengthening of the U.S. and the dollar in the second half of the 2015 have imposed a double whammy on the Russian economy. In retrospect, the forecasts of the year ago now appear to have been far too optimistic in the respect to both of these parameters over which Russia has no control. Real income has declined with a long productive investment. And in the climate of uncertainty prevailing this year, not to mention geopolitical concern rather than consumers for enterprises were anxious to spend. Bank borrowing has reflected this in the relative abstention. As a consequence, real GDP is now expecting to decline by 3-4%, driven by a contraction in domestic demand, weighed down by fallen real wages, high interest rates, and weakened confidence. With the underlying determinants so much worse than foreseen early in 2015. It says something about the resilience of the economy that the expected outturn is not even worse. For technical reasons, there is a reasonable chance that the poor results for this year may be revised upwards. Like the rest of the world, there is nothing that Russia can do about the surging value of the U.S. dollar. From 52 rubles to $1 a year ago, the exchange rate now stands at 71 rubles, a depreciation of 27%. Russia is not alone. Even the euro has depreciated by about 11%. By allowing the ruble rate to adjust, the central bank has been able to maintain its foreign exchange reserves, limiting the drop to 4%. But what about next year? Many observers conceded that the economic situation will continue to unravel. There has been considerable hand-wringing about Russia's economic prospects. This is no surprise that the oil price this week hovers around its lowest point in 11 years, or just over $34 per barrel. No doubt, the prices of Russian assets reflects a significant risk premium to compensate for a potential crisis situation on the back of further drop in oil prices, geopolitical confrontations, ongoing sanctions, and their associated limited access to markets, banking sector stress, and corporate default concerns, and deep economic stress. Since all of these risks are recovery is likely to be modest, as the limiting factors behind decelerating potential growth will take time to be addressed, leading to the medium-term growth of 1-2% per year. Unfortunately, despite all the talk about economic dissatisfaction and diversification, at the same time, the year of the high oil prices discouraged the galvanization of political will to pursue tough structural reforms to improve the investment climate. A long period of oil prices below 40 per barrel, $40 per barrel might just be the trigger to include piecemeal structure changes, as foreshadowed in President Putin's when we start back to work after the New Year's holidays, we should not be too surprised by the headliners reporting the welcome drop in inflation back into single digits, largely because of base effects, the real neverthelessness, and barring a geopolitical disruption, the CBR will be able to proceed rapidly to cut its benchmark discount rates starting in the first quarter of 2016. That said, medium-term prospects remain highly uncertain. The external environment is not benign. There are just too many accidents waiting to happen in economic and financial terms, whether in the Eurozone, the Middle East, China, or Japan. And more fundamentally, if Russian policymakers cannot summon the political will to promote a thriving private sector, that productive investment as the critical driver of longer-term sustainable growth will not materialize. Thank you for your attention.